and the NASDAQ 100, which megacap has more to prove and which matters most to the markets. Joining us now, Dan Niles, founder and portfolio manager of Niles Investment Management. Dan, great to have you with us.
My pleasure.
You are most excited about Apple, but it seems like they have to deliver a lot in order for you to be vindicated here. Bigger form factor, so an AI-enabled iPhone.
Yeah, and with Apple, it's more of a call for this year, not this quarter. I mean, obviously into this quarter, everybody's concerned about memory prices and what that does to forward margins. But I think services, will be surprisingly good, and that has very strong margins. And so you may get a bit of an offset there. I think the quarter is fine. People are nervous, obviously, about the guidance. But the real thing is, if you think about this entire year and where Apple's come from, they're arguably two years late on AI, and you haven't had a really good phone in a while. And you're finally going to get a foldable iPhone at the end of this year, and it's going to be having an AI-enabled Siri. And if you look at the past, when you had the iPhone 6, for example, and you moved from a 4-inch screen to a 5.5-inch screen, revenues went from growing 7% in fiscal 14 to 28% in fiscal 15. And don't forget, Samsung's had a foldable phone since 2019. So Apple, as usual, is pretty late, but that's what I think drives, actually for the first time in a long time, a pretty solid upgrade cycle.
Is it a certainty in your view that Apple's margins get impacted by the high price of memory? I mean, you know, we see the memory stocks screaming higher, basically, every day, it seems. Yes. So is that a foregone conclusion that those who consume those memory chips that need them will pass that cost on?
Yeah, I mean, Apple's going to get affected, but remember, Apple's buyers are also wealthier buyers. And so Apple will try to pass those costs forward. And so I'm sure the gross margins, operating margins will have a little bit of downward pressure, but that's why the stock's where it is. I think if you're thinking about the entire year, what you should be getting excited about is I may actually have a good product that I can buy relative to the Android ecosystem for the first time since AI came out, and arguably before that. And so that's what makes Apple, I think, interesting for the year. And I think when they give the guidance, I think the quarter is going to be actually a very strong quarter, but I think when they give the guidance, that'll kind of clear the decks for people to start thinking about the rest of the year.
Dan, we saw a little bit of a bounce in Microsoft, which, itself is looking cheap relative to the last couple of years. Nobody really loves the spenders right now. They're kind of using all their what would be free cash flow to build data centers and all the rest of it. Do you see a kind of a contrarian opportunity in any of this, whether it's software more broadly or just others in the Mag 7?
Well, it's going to be interesting to see how discerning people get on Microsoft, because I think they're actually going to put up pretty solid numbers for one simple reason. If you look at OpenAI, OpenAI exited 2024 at about a $6 billion revenue run rate. They're exiting 2025 at about $20 billion. Their plan is to exit the year we're in at about $44 billion, and that really drives Azure. Now, the losses continue to grow like crazy, and remember, Microsoft owns about 27% of OpenAI. Mm-hmm. So I think it's going to come down to, do people look at, oh, well, the numbers all look great, or do they start to focus on, well, how's OpenAI going to fund all these spending ambitions? And that's really what's been affecting these two separate groups of stocks since late October, because the Google ecosystem since October 29th is up about 20% since that period year to date. The OpenAI ecosystem, which includes SoftBank and Oracle, et cetera, that's down about 20% since October 29th. So I think it's really going to come down to that. I actually like Microsoft into this because I think they've got more plays than just OpenAI, and they are actually generating a fair bit of cash. But to what Melissa brought up earlier, the memory costs going up a lot actually impacts them, and we saw this with Intel, where it is going to impact sales of PCs, and that's very profitable, unlike OpenAI business, for Microsoft through their Windows franchise and Office. So that's the one thing I'm wondering about in terms of their guidance for the March quarter.